right. Hey, everyone. Welcome to the Ultra High Net Worth Clients Podcast. I'm your host, Chris Broadhead. Today, we have the pleasure of talking with Vincent Giardini Jr. Hey, Vincent. Thanks so much for coming on the show. Can you tell us a little bit about yourself?
My name is Vince Giardini. I am a registered representative, investor advisor representative, and life licensed, working with IronLife Financial, which partners with PFS Investments. We are a full service company. We offer everything to our clients from auto and home insurance, life insurance, retail funds, managed funds, annuities, pretty much anything in financial services.
That's great. Yeah. You seem like you're just a very personable, easy to talk to guy. So, a lot of this more complicated stuff, it must sound nicer coming from you.
Well, I try, that's a problem. There's a problem in that in financial services, it becomes overcomplicated. And, a lot of this has to do with the market that we target, which may be different from some other, what I call wealth advisors. We don't call ourselves wealth advisors because our target market are those that don't have access to the kinds of advice and support that the ultra high net worth clients do. Now, I would never turn away a high net worth client, and I do have a couple. We have several as a team, but that's not our market. What our market is the middle America, those that don't have access to that type of support. So, when I work with a client, I try and make it as uncomplicated and as simple as possible. Now, sometimes that's a little bit of a challenge for me, and I'll tell you why. My career, going back undergraduate, I started out with a degree in electrical engineering at Rensselaer, upstate New York, and worked in aerospace for my entire career. And along the way, I moved from the engineering to the business side, and I had gotten an MBA in banking and finance, and then subsequently a doctorate in behavioral finance. So I can overcomplicate things with the best of them, but I really resist that, and I try and make it as simple as possible. But that background and my introduction to the owner of this brokerage kind of is what came together to give me the reason for why I'm doing what I'm doing. Because with all of that background, managerial and academic background, I didn't learn anything about personal finance. And that's because our educational system doesn't teach that. I didn't teach it when I was teaching. By the way, I taught for 25 years as an adjunct in finance and economics at Stony Brook here on Long Island. And I never taught that, and I didn't learn it. And because of that, my wife and I made mistakes, missed opportunities. We did okay. I think we were following the herd, and the herd was going in the right direction. But when I met with the owner, Aaron, of the brokerage, and he explained that the way they accomplish this is through financial education, helping people understand how money works. It resonated with me, and I said, I want to be part of that. I want to be able to help fill that gap. So that's one of the reasons why I do what I do.
Mm-hmm. That's awesome. So you said you got your doctorate in, what was it? Your PhD in
behavioral finance.
Behavioral finance. Wow, that's
So it's actually interesting. It wasn't my intent when I went for it. It's a branch of behavioral economics or economics, and what it really does is focuses on the reasons why people make the decisions they make financially. And that comes in very handily. When I'm dealing with a client and I'm trying to, over the last couple of years, trying to walk them back off the ledge, because of the roller coaster of the market, it helps me to understand where they're coming from. Is it focused on the cerebral cortex, meaning it's a rational, it's a rational issue that they're trying to resolve, or is it coming from the amygdala and it's fear-based? And you can't, if somebody is approaching, or asking questions that are fear-based, no amount of reason is going to help them. So what I've learned that works best is to tell stories, and make sure that those stories connect with them emotionally, to be able to calm them down and say, let's stay the course. Has anything changed? Are you retiring 10 years earlier? Did something else happen that would cause you to change the plan that we put together for you? And then I'm able to walk them back, calm them down, and maintain their plan.
Mm-hmm. That's awesome. If you feel comfortable doing this and you don't have to share any specific details or names or locations, can you give us an example of time that this happened recently?
You mean as far as helping a client pull them back off the edge? Well, there's so many of them. I mean, I've had clients call me and say, this was maybe about a year ago. They call and say, my God, what should we do? Should we take it all and put it into cash? Or they'll say, somebody was telling me I should take it and put it into gold and silver. Now, it depends on where it's coming from. If it's somebody that's coming from a rational standpoint and they're saying, let's put it into gold and silver, what I'll do is I'll show them charts of the performance of gold and silver, precious metals, I could go back 200 years, and I could show them how the market has consistently outperformed precious metals over that period of time, so that I can convince them on a rational basis. And I've done that. I've had a couple of conversations like that. I'll have people, come and say, well, maybe we should go into Bitcoin. I heard Bitcoin is wonderful. Well, I'll usually what I'll say there, because I'm not a fan of Bitcoin. I understand Bitcoin. I'm not a fan of it. I understand that, who knows, in some time in the future we may end up with a digital currency. But I'll say, if you have some money that you want to play with, go right ahead. I said, but what I recommend is take a flight out to Las Vegas or drive down to Atlantic City and have fun with the money. There are probably, I'm trying to think of other examples of clients that that I've helped. I mean, it's been a consistent drumbeat of people that have expressed concern over the last year. Now I'm in the process of meeting with my clients. I meet with my clients on a regular basis, probably every quarter if I can get to them. And now I'm kind of shifting their portfolios. I had put them in something that was more recession friendly a couple of years ago. Now I'm kind of moving them into position for the upswing.
Mm-hmm. Okay, nice. So you think we're kind of through with the worst of the recession we were in?
I think we're beyond that. I mean, as an economist myself, and reading other economists that I trust, I respect. I think we've hit the bottom. There may be some time where we'll ride the bottom for a bit, but I expect to see things start to move up. And historically, if you look at the history of bulls and bears over the last 90 to 100 years, the bear market that we've come through is pretty typical. And now I expect, and usually the ratio of bulls to bear is, like, I think, if I remember correctly, it's 3-to-1, something like that, meaning in terms of the length. So I would expect going forward, we're going to see an extended bull market that will help, whatever clients have lost over that period of time to grow. And I always tell them, have you sold anything? If they haven't sold anything, they haven't lost anything. It's all paper right now. So stick with it. Don't get off the roller coaster in the middle of the ride, and just ride it out.
Awesome. That's great. So you mentioned earlier that you work for an independent brokerage firm. Remind me of the
Right.
name. What was the name of the firm?
It was IronLife Financial.
Great. Why did you choose to go the independent route, and why did you choose IronLife Financial?
Okay, interesting. That's a good question. In essence, I wasn't really searching for this, but when the opportunity was presented to me, I looked at what else was out there in the market. And one of the things that I wanted is I wanted to be able to I wanted the independence of being able to utilize the solutions that are best for my client, not be held down to a set of proprietary products. I don't want to name other brokerages, but many other brokerages, you work for them, and you can offer their set of products, whether it's certain types of uh, uh, of of, of mutual funds or annuities or insurance products, but it's theirs. It's limited. So I didn't want that. I wanted the open architecture that would allow me to find the best solution for my clients. And I also wanted to work with a company that had a strong ethical background. Now, we do partner with a company. You have to do this in the industry. You can't do it entirely on your own. You've got to partner with a BD or RIA, broker dealer, registered investment advisor. I usually explain that to my clients, but I'm not probably going to need to do that for this audience. But so the BDIA that we partner with is PFS, Primerica Financial Services, and I looked into them. I looked at who they were, their credibility. They've been in business since the 70s, involved in investments since the 90s. Now publicly traded corporation on the New York Stock Exchange, and highly rated in terms of customer service and integrity. There's a number of articles written over the last few years on Forbes and Investor Business Daily about them. But one of the things that was most important was that it was the independence, autonomy, and ownership. And the third thing is important because that's rather unique in the industry. We are able to not just build a business within the structure, but we can own it. Most people, and I've talked to many financial advisors that have left and they've either retired or whatever, and I'll ask them, so what were you able to take with you? And they'll usually say, well, nothing. It's you don't own the book of business, and you can't take it with you. And with us, you can work your business, grow your business to the point where you can own it. I could sell it. I could leave it to my children. I could bring on one of my children, have them take over the business. Of course, they got to get licensed and so forth. But that's something that's extremely attractive and was attractive to me.
Mm-hmm. That's great. And what was it about IronLife Financial that attracted you?
Well, it was the connection that I established with the owner, Aaron. Owner is Aaron and his wife Dina. It's not a huge brokerage, but it has the backing of very large BDIA, and it's a family. We are strong communicators. The team is probably about 100 people altogether, but spread out throughout the country. I mean, there are team members here in New York, California, probably 17 different states. And we meet often online. Occasionally, a company conference we'll get together. I haven't met all the people on the team face to face, but I still know them well, and I still consider them friends.
Yeah, that's 2023 in a nutshell.
It is absolutely. I've got clients all over the country, probably in as many states as I quoted. I'm licensed. I'm able to work anywhere in the country, but I have clients probably in about 13 different states. Both life and license for retail funds, and of course my advisory license is nationwide.
Hmm. That's awesome. Um, you informed us that your focus is on Middle America. What does that mean, and why is that your demographic?
Well, middle America, meaning essentially middle income America. Um, people. I have clients that run the gamut from people in their 20s to people in their 70s, um, and and everybody in between. Uh, but I'm not. These clients are like I love working with a young person in their 20s. They're just starting out. Maybe they've graduated. Maybe they graduated college. They got their first job, and I can help them, understand what their options are for investing. Maybe they have a 401k at work, and I'll explain to them how important it is to invest, to contribute to the match on the 401k. And if they have anything else, I'll explain to them how an IRA or Roth IRA, usually recommend a Roth IRA would help them. And I'll show them, I'll give them examples. I'll use a financial calculator to tell them, look, you put $100 a month. This is what it'll be in 40 years or 35 years, whatever it is when they plan to retire. And, their eyes will start to open wide. And they'll say, well, and I've had young clients say, well, how much can I invest? I'll say, well, right now, you could put $540 a month. You put $6,500 a year total. And what would that be? I could show them, well, that could be at this starting early, that could be $5 million, and they're sold. That's what they want to do. And I can help them to do that, set up a portfolio and get them going. Families, young families with young children. I see these families, oftentimes with no income protection. That's another word for life insurance. And here you are with, husband and wife, maybe they both work, they have some couple of young kids, they have no protection. And I'll ask them, I said, so what do you think is going to be the result of if one of you are gone? And they may not have thought about it before, or that maybe they didn't want to think about it. And I'll try and show them that it's important to protect the family and not to rely, well, first of all, the statistics are that 50% of people in this country have no life insurance, which is scary by itself. And the 50% that do have the wrong type of insurance. And maybe they're just relying on insurance from work. And unfortunately, the payout rates on that type of insurance are very low. And typically people don't just drop dead, they get sick. And then they can't work. And then the company lets them go, they lose the insurance, and now they're not insurable. So I'll explain that to them and help them, and again, help them with maybe they've changed jobs, and I can help them with a rollover or put that money into an IRA. Why an IRA versus their existing 401k? Well, I'll tell them there's reasons. The 401k is good. But it's got limited selection, very limited selection. Sometimes it has higher fees, and you don't get any advisory support. I can't advise them on a 401k. I can only give them general concepts, general advice. I can't be a fiduciary on 401k that I'm not a plan advisor on. But I'll explain to them that invest to the match. Take anything else, put it into an IRA. You have more selection, lower costs, and more advice. And then of course, the other end, the people are entering into retirement. Well, they've got different concerns. They're concerned now with capital preservation and not outliving their money. So that's when I can talk to a client about being able to set up a strategy so that they have income in retirement, whether it's, income from a combination of retail, managed and annuities, to make sure that they have a strategy and a plan to be able to have the income they need for the rest of their life.
Mm-hmm. Awesome. And what have you found to be the best ways of finding these types of clients?
Absolutely, it's through referrals. I mean, I don't do cold calling. I'd rather chew my leg off. I
It
don't think it's
doesn't
very
work
effective.
anyways, so.
No. And yes, I do work with social media. That's more for credibility than anything. I'm on Facebook, LinkedIn, Instagram. I gave up on Twitter, aka X. But it's the best way to grow my business is, without a doubt, is through referrals. When I work with a client, because one of the things about the way I work with a client is I don't charge them. When we meet with a client, we will do a complimentary financial needs analysis. It's a comprehensive and complimentary look into where they stand financially and where they're going. It almost acts like a GPS for their money. So I put a plan together based on the FNA, and I don't charge my clients for that. I don't get compensated from them. I get compensated by the companies that I connect them to, and they're happy for that. And when I've helped a client, and I've given them a plan, I've helped them to get on the path to financial independence, I'll ask them, who else can I help? Who do you know that could use the type of advice that we provide? And they'll start writing out names. So, okay, well, you can call this guy. It's, I got my neighbor here, my brother-in-law, this, that, and that's how my business grows. It's, without a doubt, that's the best way.
Oh, wow. Do you have you found a good way of asking for referrals?
Well, yes. First of all, I don't ask for referrals. I call it referrals, but I ask for introductions. There's a difference. If you ask somebody for a referral, they may give you people they haven't talked to, just names out of their contact list. What I want is I want people that are that they want to introduce them to, and there's a couple of things I'll do. There's a couple of games I'll play. I'll play the vacation game, we call it. I'll ask them, if you won a all expenses paid trip to anywhere in the world, where would that be? They may say Sicily, Florence, somewhere else. All expense paid for a month. Well, that's great. Okay, now who would you bring with you on that vacation? And they'll talk about their brother-in-law, this person, their close friend, whatever, and we start writing down names. And it goes as far as with that as I can. And by the way, I'll say, and you're going to invite those people, and they're going to be there's no cost. It's going to be all expense paid for them. So who are you going to ask? So they'll give me all these names. So that's one way. I'll get named that way. The other thing I'll say is, and depending on the age or whatever, maybe if it's somebody they're not married yet, I'll say, if you were going to have a wedding, who would be in your wedding party? Who would you invite to your wedding? Again, it's just to help them think about names, because if you just ask somebody, can you refer somebody to me? They haven't thought about that. It's like their mind goes, and it's hard for them to think. So I have to help them. I'll ask them. I'll say, who do you know was recently married? Who do you know that just had a baby? Who do you know that changed jobs? Who do you know that's a few years from retirement? Kind of memory joggers to help them identify names. That's pretty much it. And I do it every time I meet with a client. I just met with a client earlier today. It was a quarterly review. They've been a client of mine for a couple of years. And I did the same thing at the end of the review. I said, I remind them, I don't charge for what I do. What I do ask is, if you would help me to grow the business and help other people, who else can you introduce me to? And she says, oh, you know what? Did I ever give you my brother-in-law's name? And I asked what the name was, and I said, no, you haven't. So while we were on the phone, she sent a three-way text. She said, oh, I had been talking to him about you, and he was interested. So right then and there, she sent the three-way text with his name and my name and her name. So now I'm connected. That's how it works.
Okay, that's really fun. That's super unique and organic and non-salesy way to get referrals. I love that.
We don't, we don't consider ourselves salespeople. If I show somebody, how they can achieve, how they can go from maybe being burdened with debt to being debt free in, decades earlier. I don't have to sell them. I just have to teach them. I have to educate them. And, same thing with if I got somebody that's, working, got an IRA at the bank, earning 1.5% interest, which is not unusual. And I show them how they could take that and put that into quality mutual funds, earning closer to market returns. I usually say around 9%. The average market return over the last 90 years has been between 10 and 11. So if it's a long time horizon, it's not unreasonable. I don't have to convince them. I don't have to sell them anything. They say, okay, when can we do this?
Awesome. We are coming towards the end of our time, and this show is called the Ultra High Net Worth Client Podcast, so I would be remiss if I didn't at least ask. If you feel comfortable sharing, you don't have to share any specific names, locations, details like that, but if you're comfortable sharing, I would love to know how you found and closed your largest client.
Well, it was, and I expected that question, it was through referral. Without a doubt. And there's actually two that come to mind right off the bat. One is 74. He's going to be 75 this year. He had I'm not going to give details and stuff, but he had a good amount of money saved. Then he had a large amount that was invested, and again, I won't say names, with another a company, a managed account. And when I spoke with him, I asked him, and it's my meetings are all very conversational. So I asked him, so what's going on with this fund? He said, I'm really frustrated. I've placed calls. The guy never returns my call. I haven't heard from him in 6 months. It's frustrating. He says, I wasn't thrilled from the beginning. He had him for a while. And he said, when I first met with him, I asked questions. And this guy happened to be an engineer. So he was what we call a type T personality, a technical, asked a lot of questions, very rational and reasoning, right? So he says, I asked him about when we set up the account, this other advisor, I had some suggestions, and he says, "Oh, don't worry about it." He says, I know what I'm going to do for you. I'm going to set you up with this advisor and that advisory company, and you'll be fine. And he wasn't comfortable with that. He wanted to be part of the process. I explained to him how we work, and we work very differently. Our advisory platform consists of about 12, I think it's now 13 advisory companies that we can use to put together a portfolio. And it's something that I do with the client. I get to understand what their risk tolerance is, their time horizon and so forth. And based on that, we put together a recommended portfolio, but they're part of the selection. Who do they want to work with? What advisory companies? Because they're all different. Some are tactical, some focus on ETFs, some have specialized with SMAs. There's others that are for tax harvesting. And we're able to put a portfolio together that it meets the client's needs, but we involve the client. And when I showed him that, and I said, this is what we can do. He says, that's what I want. He says, I need someone, and I meet with this client. In fact, over the last couple of years, I probably met with him once a month. Not a big conversation. How you doing? Any questions, any concerns, whatever, we talk it through, and that's what he was looking for. So I find that, the other client is someone out in Nevada, and he was, again, a referral from somebody else, very high net worth. I don't want to give their specifics, but high wage earners, good amount of money put aside, and so forth. And what they were looking for is someone. They didn't have an advisor, and what they were looking for was someone that could guide them. And I think what sold them on working with us is the integrity, the fact that I didn't speak down to them. Not that highly intelligent. But I explained things in a way that was easy to understand, and put together a good plan for them.
That's awesome. You mentioned I think you said type T clients, like these are engineers.
There's a personality profile tool that's called STAR, STAR. So it's stability, technical, action, and R is relatable, relationship. So it's when you're working with somebody, you get to know. You can usually tell pretty early what their personality is, and it's important to relate to them based on that. Like if I'm dealing with a T type, and I'm a T type, it's the engineering background, stuff like that. I can talk to somebody on that level. If it's somebody that's an R relationship, I got to tell stories. I got to tell stories that touch the heart. It's important. I mean, it sounds funny, but that's what I need to do, because that's how I can connect with them. So if it's an action person, I got to make sure the meeting's short. They don't want to sit in an hour or an hour and a half long meeting. So,
what about an S person?
An S person is not too different from a T in terms of the way you approach them. They are looking for they're looking for the plan, because its stability is what's most important. So they want the details, but more importantly, they want to know that there is something at the end that is going to provide stability.
Mm-hmm. Okay, awesome. So you said you meet with this T client relatively frequently, once a month or so.
Yep, I have. Mm-hmm.
What was one question or concern they had in one of your recent meetings, and how did you answer it?
Let me think.
Sorry to put you on the spot like that. I'm just very
Well,
curious.
no, that's okay. I'm just trying to think. The last thing that we had talked about is he wanted he's not risk adverse completely, but he wanted to provide some capital preservation beyond what he had. So he asked me what the options were. And I gave him some advice on a type of shield annuity that provided that the downside protection and the upside opportunity. So if you're familiar with a shield annuity, that's what they specialize in. And the nice thing about it is that there's no fee. It does lock his money up for a period of time, but there is enough liquid net worth that's not an issue. He just wanted to make sure that it was protected. He still had the opportunity for the upside, and so that's what I helped him with.
Mm-hmm. Awesome. Well, we're coming towards the end of our time. This has been awesome. Really enjoyed talking to you today, Vincent. So I love to end each interview with kind of a more subjective question. You can answer this however you like, and that question is, what are you working towards?
Well, what am I working towards? Well, I want to, that is, we talk about this as a company all the time. We meet once a week, kind of to sharpen the sword type thing. And I look at, what are my goals? What are my objectives? And, I have a number of things that are, top of the list. First of all, I want to build a business that I can own, that I can leave to my children. One of my children has already expressed interest possibly in doing this, taking over the business. I want to have something that I can leave for my grandchildren. I have currently 7 with an 8th on the way. And I want to do something to honor my wife. And I said before the interview started that my wife passed away about 6 weeks ago of a neurodegenerative disorder. And I know what it's like to be a caregiver. It was 9 years. And I'd like to be able to do something to help other caregivers, to lighten the burden for them. So those are my whys. That's my why.
I love that, and yeah, and I'm very sorry for your loss again. That's incredibly difficult. So, well, awesome. Well, thank you so much for taking the time to spend with us today. You're a wealth of information. I love your perspective and passion for this business. Where can our audience find out more information about you?
I have a couple links there. Facebook, LinkedIn. Those are probably the two. I also gave you a link to my company website. Any of those are ways to get to know more about me and to contact me.
Mm-hmm. Awesome. And we'll be sure to link those in the show notes on all the different channels. So, all right. Well, thanks again so much, Vincent, for taking the time to hang out with us today. I learned a ton, and I'm sure our audience did as well. All right, everybody. Thanks so much. See you.
Thank you, Chris. Bye-bye.